Here are 8 news from the world of the crypto industry. First, news. Bitcoin bulls need to be patient. According to Greg Cipollaro, statistics show that September is the worst month for Bitcoin, with an average monthly loss of 5.9% over 13 years since 2011. However, the fourth quarter of the year turns out to be the strongest for the leading cryptocurrency, with October and November showing an average increase of 16.1% and 40.6%, respectively. Unfortunately, potential short-term catalysts for Bitcoin are currently limited. August and September have historically been weak months for Bitcoin's price. However, October and the fourth quarter, in general, are usually favorable for price movements, and bulls need to be patient, Cipollaro said. The analyst emphasized that Bitcoin bulls should keep an eye on factors not directly related to cryptocurrencies. These could include employment data, inflation, and U.S. Federal Reserve policy. Another important event will be the U.S. presidential election on November 4th. Republican candidate Donald Trump has shown himself to be a crypto-friendly politician, while the stance of Vice President Kamala Harris is still unknown, the expert added. We will not speculate on who might win the election, but November could be a turning point for the industry. Until then, Bitcoin could remain influenced by the broader market background. Earlier, expert and partner at the Bitcoin Opportunity Fund, Mark Moss, said that Bitcoin's price by the end of the year will depend on the actions of 2 U.S. politicians, and increased liquidity in global markets will support the leading cryptocurrency. Second, news. NYDIG experts do not expect Bitcoin to rise in September. Experts from the cryptocurrency platform NYDIG do not anticipate a rise in Bitcoin's price in September 2024 and advise traders to prepare for the worst. Unfortunately, at the moment, there are no catalysts for upward movement in the Bitcoin market. Most are related to macroeconomic data, inflation levels, unemployment, GDP growth, or monetary policy, changes in the key interest rate, and few catalysts are connected to cryptocurrencies, wrote NYDIG employees. NYDIG staff also provided statistics from 2011 to 2024, showing that Bitcoin rose in price only 4 times in September, meaning the likelihood of a price increase is 30.8%. Meanwhile, the BTC price fell an average of 6% over the month. From September 1st to 6th, Bitcoin's price dropped by 10%, suggesting that volatility may decrease in the near future, and the market may enter a flat phase. However, NYDIG experts predict that Bitcoin, like many other digital assets, will continue to decline at least until November, when the U.S. presidential election will be held. Many in the crypto community believe that this event could trigger a bullish trend if Donald Trump, who is supportive of Bitcoin and the crypto industry, wins. Third, news. The longest phase of capital outflows from Bitcoin ETFs has ended. On September 9th, the longest phase of capital outflow from Bitcoin ETFs issued by American companies came to an end. According to CoinGlass, the capitalization of BTC-based funds began to decline on August 27, and the negative trend continued until September 6. Last Monday, derivative trading was paused due to the U.S. Labor Day holiday, so the capital outflow continued for 8 consecutive days, during which Bitcoin ETFs lost $1.2 billion. Since Bitcoin ETFs began trading in the U.S. on January 12, 2024, the capitalization of these derivatives has twice decreased for 7 consecutive days, excluding weekends and holidays. This occurred from April 24 to May 2 and from June 13 to June 24, amid a drop in the cryptocurrency's price. Inflows of capital into the funds typically accompanied a significant rise in the digital asset's value. The longest streak of losses for Bitcoin ETFs, lasting 8 trading sessions, followed the broader trend. It started after BTC's price began to decline on August 26 and ended on September 9, when the coin's price significantly increased. Thanks to a reversal in the spot market on Monday, Bitcoin ETFs attracted $28.6 million in capital, finally breaking the losing streak. Fourth, news. Bitcoin could drop below $40,000. According to experienced trader Peter Brandt, the price of Bitcoin risks falling below $40,000. His predictions are based on Bayesian probability theory. Brandt's methodology involves revising the probability of events as new data emerges. This approach is a key principle of Bayesian probability, which helps investors adjust forecasts in line with changing information. The probability of Bitcoin falling below $40,000 is 65%. Brandt began trading Bitcoin back in 2016. Initially, he believed there was a 50% chance BTC would reach $100,000. At the same time, he considered that cryptocurrency might follow the fate of Pet Rock. Pet Rock is a reference to the story of the town of Pet Rock, Indiana, USA, which experienced a real estate price boom in the 1930s due to rumors of a large factory being built. However, these rumors turned out to be false, and property prices plummeted, leaving many residents financially ruined. Over time, Brandt's views shifted, largely influenced by the technical analysis tools he developed. In early June, the trader estimated the probability of Bitcoin dropping to $30,000 or rising to $140,000 at 50/50ths. As of now, he holds the following views. The probability that BTC will fall below $40,000 is 65%. The probability that BTC will reach $80,000 is 20%. The probability that BTC will rise to $130,000 by September 2025 is 15%. Bernstein analyst Gautam Chugani believes that the upcoming U.S. presidential election in November will significantly impact Bitcoin's value. We expect the difference between the two political outcomes to be significant. If Trump wins, Bitcoin will reach new highs, and by the fourth quarter, its price could rise to $80,000 to $90,000. In the event of a Harris victory, we expect BTC to drop to its current low of around $50,000 and then fall further to $30,000 to $40,000, Chugani noted. After peaking in March, Bitcoin's price has fluctuated between $55,000 and $70,000. According to CoinGecko, as of now, the top cryptocurrency by market capitalization is trading at $57,210. Over the past 24 hours, the asset's price has risen by more than 4%. The U.S. presidential election will take place on November 5. Aside from this event, much in the crypto market depends on the overall political climate in the country, particularly the attitude of American politicians toward cryptocurrency. According to forecasts by Standard Chartered, if Trump wins, the price of Bitcoin could rise to $150,000. The bank's analysts consider the Democrats' policies to be less favorable for the crypto industry. A favorable election outcome for cryptocurrencies and a positive regulatory environment have yet to be priced in. A positive regulatory environment would eliminate political risks for financial institutions and banks, allowing digital assets to compete with traditional institutions for institutional investments, Chugani added. Fifth news. Don't rely on bonds, buy Bitcoin. Robert Kiyosaki expressed concerns about the state of the global financial system and used a tweet to warn investors about the risks the world economy faces due to its heavy reliance on debt. Kiyosaki explained that governments rely on bonds to support the economy, which are ultimately a form of debt. Kiyosaki fears that, in the long run, the world will not be able to depend on government bonds for much longer, which could lead to a financial system collapse. The investor believes that market downturns are often visible from afar, giving people the opportunity to prepare for the crash. According to the author-entrepreneur, hidden problems with banks present a significant risk, especially in the United States, where Kiyosaki is anticipating a recession. He advised his followers to invest in tangible assets like gold, silver, and Bitcoin. Several months ago, Kiyosaki criticized cryptocurrency exchange-traded funds, ETFs, calling them fake investments disconnected from real assets. In his opinion, it's much better to buy Bitcoin directly. Sixth news. U.S. regulator warns of risks associated with spot Bitcoin and Ether ETFs. The U.S. Securities and Exchange Commission, SEC, warned investors about the risks of investing in exchange-traded funds, ETFs, tied to Bitcoin and Ether, calling them speculative products. The regulator urged investors to consider the volatility of cryptocurrencies and the lack of regulation. The SEC acknowledged that Bitcoin and Ether are considered the most significant cryptocurrencies, and investors can access them through futures and spot ETFs. Futures ETFs involve contracts speculating on the future price of assets, while spot ETFs track the current value of crypto assets. The agency emphasized that spot ETFs might seem simpler, but they carry specific risks that investors need to take into account. Spot ETFs linked to Bitcoin and Ether are especially vulnerable to risks due to price fluctuations. This volatility can lead to discrepancies between the trading price of ETF shares and the intrinsic value of the cryptocurrencies. Moreover, the lack of oversight from regulatory authorities can provoke market manipulation. Cryptocurrency ETFs are not registered under the Investment Company Act of 1940, so protective measures that apply to traditional financial instruments, such as mutual funds, do not apply here, the SEC clarified. The Commission also recommended thoroughly studying the documentation to understand the full range of risks. This will help investors carefully consider their investment strategy and make informed decisions. Recently, Bloomberg Intelligence senior analyst Eric Balchunas suggested that the U.S. regulator is unlikely to approve spot ETFs for the cryptocurrency Solana due to concerns that SOL might be recognized as a security. 7th News. The number of active users of Bitget Wallet reached 12 million per month. Number of active users of the Bitget Wallet cryptocurrency wallet has exceeded 12 million active users per month, and the app has become the most downloaded Web3 wallet. Representatives of the project shared this information with the encrypted editorial team. According to the press release, the wallet's integration with Web2 platforms allows Bitget Wallet to make Web3 invisible to users, simplifying the registration process and increasing accessibility. In August, the app was downloaded by nearly 2 million people, according to data from the App Store and Google Play. Continuing to bridge the worlds of Web2 and Web3, Bitget Wallet is paving the way for the next billion users to enter the decentralized future, the statement said. Bitget Wallet COO Alvin Can noted that the company's growth this year is largely due to deep integration with Web2 platforms, especially Telegram. He said that leveraging Telegram's large user base created a viral effect, attracting a global audience unfamiliar with cryptocurrencies. The press release also stated that a key part of Bitget Wallet's strategy is removing technical barriers to transitioning users from Web2 to Web3, making Web3 services more accessible through simplified processes. According to the team, using distributed computing technology, users can create and manage wallets with familiar Web2 logins such as email, Apple, Google, or Telegram accounts. After introducing the MPC wallet with TON network support, interaction with the Telegram/TON ecosystem has become more convenient, and now more than 40% of Bitget Wallet users utilize the TON MPC wallet. Thanks to the ability to log into the wallet via Telegram and the development of trading bots, the transition from Web2 to Web3 has been simplified, and the number of MPC wallets created has increased 2.7 times since opening to Messenger users, the company noted. Bitget Wallet also pointed out that Tap to Earn, T2E, games in the TON ecosystem contributed to user growth. The to-market app, supported by Bitget Wallet, attracted over 20 million users in just 2 months, the report said. Additionally, the team noted that TON ecosystem users prefer mobile apps, unlike traditional Web3 users, who prefer browser extensions. This trend also shows that users now prefer Bitget Wallet, which has become the number one choice for 68% of Telegram game users, the company stated. The organization also said that Bitget Wallet's global expansion is focused on offering financial solutions to underserved communities. By combining global presence with localized services, the wallet has overcome geographical and economic barriers, supporting more than 168 countries. Countries such as Japan, the Philippines, Thailand, India, Nigeria, Italy, Sweden, Australia, France, Portugal, the United Kingdom, Turkey, and Canada have shown user growth of 1,000% compared to last year, with many users gaining access to decentralized finance for the first time through Bitget Wallet, according to the statement. The team also noted that Bitget Wallet's collaboration with more than 50 projects in the TON ecosystem, such as Cadison, To Market, and Notcoin, has enhanced the user experience in Web3, with Bitget Wallet supporting 17% of active addresses in the TON network. The Bitget Wallet team stated that the wallet has become an industry leader thanks to its platform-based approach, integrating multiple blockchains and supporting everything from cryptocurrency trading to NFTs and launchpads, all in one convenient app. Its features, such as keyless wallets and account abstraction, make Web3 more accessible for beginners. Known for its success in meme coin trading, Bitget offers tools like automatic slippage adjustment, gas-free transactions, quick trading modes, and AI-powered smart money tracking to help users make more informed trades, the statement said. The company also noted that it launched the BWB Fund with $10 million to support new blockchain services and projects. The Bitget Wallet COO added, "With more than 90% of tokens available only on decentralized exchanges, we help users unlock new opportunities. Our goal is to bring Web2 users into the Web3 world, making cryptocurrencies accessible, especially for those living in regions with limited access to traditional finance." 8th News. In 2023, Americans lost $5.6 billion to cryptocurrency scams. The Federal Bureau of Investigation's FBI Internet Crime Complaints Center published its report on cryptocurrency scams for 2023. Americans lost $5.6 billion due to cryptocurrency fraud in that year, a 45% increase from 2022, according to the report. Complaints related to cryptocurrency made up 10% of all complaints received, but accounted for nearly 50% of total losses that year, the FBI said. The report noted that of the 69,000 cryptocurrency-related complaints received by the FBI in 2023, the victims were most often people over 60, who accounted for nearly $1.6 billion in losses. Almost 71% of cryptocurrency fraud was related to investment schemes, and about 10% involved call center scams or impersonation of government officials. The FBI received complaints from over 200 countries, but the vast majority of complaints and losses came from the United States. Many losses resulted from trust-building schemes. The FBI had one primary piece of advice for avoiding this type of scam. There's one thing these scammers usually don't do: they don't meet you in real life. If an investment opportunity comes from someone you've never met in person, be extremely cautious about their advice. Americans are also vulnerable to employment scams, the FBI warned. In these cases, workers are lured into positions abroad, such as call centers, which turn out to be exploitative. Pig butchering scams are often run from call centers using foreign personnel. Employers may demand reimbursement for employment costs, such as accommodation and food, and may confiscate the worker's passport or other documents. Other types of fraud threatening U.S. citizens include play-to-earn scams, where users pay to buy tokens for an online game, only for the scammers to freeze the user's wallet. Companies claiming to recover lost cryptocurrency may also turn out to be fraudulent. Kiosks, ATMs, have proven to provide scammers with many opportunities. The FBI recorded 5,500 cases involving kiosks, which resulted in losses exceeding $189 million. Scammers prefer kiosks over banks due to the anonymity of ATM transactions. Kiosk transactions are often associated with various types of fraud. To persuade victims to use a crypto ATM, scammers may impersonate customer support agents, government representatives, extortionists, romantic scammers, and others. James Barnacle, Deputy Assistant Director of the FBI's Criminal Investigative Division, told ABC News that the chances of recovering money lost through a crypto kiosk are slim. Barnacle added that the FBI notifies people when they discover they have been victims of fraud. Of the 3,000 people we notified this year, 75% did not know they had been scammed, Barnacle said.